read, for lack of a better word, is good. Read is right. Read works.
Hello everyone and welcome to episode 20 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out we went from 80 trillion down to 78. We expanded our market share. We bought some new stocks. We're now up to 42. 23 of them have at least a 20% market share. 14 are still under 20%. But none of these stocks really are going to be our focus this episode. This episode we are going to be working on our stock option experiment. And I think this is probably the most nervous I've been about doing one of these episodes since I started a year ago. And I keep having to remind myself that this is just an experiment and we're only going to be messing with about $1 trillion in terms of what we're going to invest in this experiment. But I'm just so nervous. I so badly want this to be a home run. I want this to work, because if it does, we are going to make so much money off of this. The only downside to this strategy is that it's very transaction intensive. There's, in order to buy 100% options on 100% of any of these stocks, you have to do a minimum of 10 transactions. And that's the best case scenario. If there are counterparties that can buy 10% at a time, great. But some of these companies are worth billions and billions of dollars. Here's the market cap. So like one down here is worth 600. This is Toyota, worth 700 billion. We're going to have a hard time being able to buy options on 10% of that stock at a time, simply because of how expensive that transaction is going to be. So this may end up being, over 1,000 transactions to go through this. It's definitely going to be over 1,000, but it's going to be a lot of transactions. So we're going to be doing a lot of fast forwarding this episode. But I'm going to, I'm going to fast forward at a speed that is probably going to be too fast for you to follow in order for this episode to be capped at an hour, because I'm probably going to play like 3 or 4 hours worth of game time. So in a lot of cases I'm going to be going at like 8x speed or whatever, so that the gaps of me just doing transactions don't last longer than a minute each time. Otherwise you want to skip forward, and I don't want to put you through that. So whenever I'm going to fast forward, I'm going to tell you exactly what transactions I'm going to do. I'll probably show you the first couple without fast forwarding, just so you can see what they look like. And then I'm going to go at Speedy Gonzalez rate, so that we can just kind of get through all this as quickly as possible. All right, so it's December 31st, and what I did in between my 2 episodes, aside from updating my spreadsheet and resorting it, it's now sorted by market, or the industry size. So our biggest companies up here, and moves on down, or biggest industry, I guess I should say. And what I did was I did a database search. Turn off these two. Stock has to have some stock traded publicly, and the analyst rating needs to be strong buy. There's 48 of those. That's too many. I want to get it down to 15 to 20. So what I did was I started playing with the market cap numbers. So I started with 5 billion. And that got us down to 40. So then I upped it to 10. And that got me to 28. And I figured, since we're going to be excluding banks and insurance companies from this test, that hopefully that would be around 20 stocks. But it turns out that almost all of these, matter of fact, in this list right now, there's none in banking or insurance. All right, so what I did was I took and I looked up each one of those stocks to see when they declared, because we're going to start buying options on January 1st, and so I wanted to make sure that we bought the earliest ones first, so the ones that declare in January are Toyota America, Gilead, and Pioneer. So we're gonna have to buy them first, and then the rest I just sorted by month and by market cap, because we want to do our biggest ones first, because our counterparties, you know, there's more counterparties that can afford these smaller ones than can afford these bigger ones. And that's going to be a big concern as we do this experiment, that we want to make sure to make best use of our counterparties so we don't run out of them on these bigger ones, because that's where most of the money is. That's where we can make our most money. All right, so what I did after I looked these up was I wrote down what their stock price is. We'll be using that to help determine what exercise price we want to use. And then what their market cap was, obviously, for the reasons I just told you. And then as we buy the options, we're going to write down what our tax cost basis was. We're going to put that in here, and then when we eventually take our profit out, we'll be able to figure out what our combined profit and loss was. All right, and as far as the options go, the reason why I'm so nervous about this is I've never bought options in this short of a time frame before. I usually buy them for the full 2 years out. And the reason for that is because anything can happen in a 6-month time frame. If any kind of disaster comes along in the next 6 months, it will not only nullify, not only will it wipe out our profits, but it will kind of nullify the experiment. We won't know if this strategy is effective over the long term if we get hit by some kind of scenario that wipes out our profit in the short term. So I'm really kind of nervous that nothing, I hope that nothing goes wrong in the next 6 months that screws this up, because like I said, this is very transaction intensive. And so I don't want all this extra work to go to waste. So anyway, we are going to proceed, and what we're going to do is we're going to wait until January the 1st to actually start buying these options. Primarily because at the end of the month is when all of these analyst ratings get updated. And when I went through on this first go round, I went ahead and looked up those companies as I showed you, and then on December the 1st or January the 1st, I did it again, and it gave me a completely new list of companies, and it was 39 companies instead of 28. Now 9 of them were part of the 28 from December. So Amazon here, he was rated as a strong buy and was still rated as a strong buy in January. Same with these other 9. But the rest of these dropped off the list. So the ones we're going to be buying options on are the ones with still a strong buy rating in January. And I expect that even on this go around, this list should be fairly accurate. I don't think enough can happen between December 31st and January 1st in terms of what's random in this game for this list to be much different. All right, so all we need to do really is to kill some time between now and January the 1st. And the first thing we're going to do is we're going to split these 3 stocks, and we're also going to mess with their management settings. I've had these notes on here for like 4 or 5 episodes, and I've never gone to look at them to actually take care of it. So we're going to start there. RakeM Insurance is very capable, and what we're going to do is we're going to lower his R&D to 3%, and we're going to change his growth rate to 1%. Then on the bank, and we're also going to split him. On the bank, he's also very capable, and yet he's spending 8% on marketing. So we're going to bring that down to 3%. And he doesn't need to be split. Next up is Mitsui. He's somewhat mediocre. So we need to increase his marketing. We're going to make it 7%. And we're going to change his growth rate to 1%. And we're going to split him. Then on Tokyo, he's mediocre. So we're going to change his R&D to 7% and his growth rate to 1%. And we're also going to split him. Finally, Progressive, we never did adjust his management settings, but we're going to be doing the same thing. Growth rate 1%. And he is also mediocre, so we'll change his R&D to 7. And he also needs to be split. Okay. And none of these guys really have a dividend. Let's give them a dividend too. Let's make RakeM Bank 1% and the insurance companies 2%. So here we're going to make it 29 cents. Make this one 80 cents. This will be $1.22. This one will be 52 cents. Okay. All that's done. Right, we've got a bunch up here that we need to split also, but we'll take care of that after we're done buying our options. The other thing that I wanted to do this look all this stuff up was I needed to figure out exactly how much money to give our three companies. And it turns out that when you're buying options 6 to 9 months out, depending on what the industry conditions are, the options will cost anywhere from 10 to 20% of the market cap for the company that you're buying the options on. So what I've done is I've taken a middle of the road approach. I've added up the market cap for all the ones on the list come January 1st. That came to close to $2 trillion. So we're going to be giving 15% of that figure to Hagemeyer, who will be our bottom rung company in this experiment. And he'll use that $300 billion to buy options with. Then we'll give him to HeartMax. HeartMax will give $75 billion to him, and HeartMax will buy options on Hagemeyer. We'll give $75 billion to Itochu. Itochu will buy options on HeartMax, and then we'll have Hagemeyer buy options on Itochu. Okay, and I know that's clear as mud right now, so let me clear that up. So what we're going to do is we're going to start out by giving $300 billion to Hagemeyer, 75 to HeartMax, 75 to Itochu. All right, now we are going to give HeartMax, we're going to give him Hagemeyer. And then Itochu, we're going to give him HeartMax. All right, so all I own is Itochu. Itochu owns HeartMax. HeartMax owns Hagemeyer. Okay, let's split him. All right, now 100% of HeartMax, or excuse me, the 100% of Hagemeyer is owned, and we need to have some public stock available in order for us to buy and sell options on him. All right? So right now, there's 5,000 shares available. So in order to have like a 90% ownership when we're done, we have to issue some new stock. We can't just sell 500 million shares. The reason why is because here's most cash. Gold Corp has close to $4 trillion in cash, and we don't control it. So if we sell those shares, Gold Corp here will buy them, and we don't want, we need those shares to go to the public. So what we're going to do is we're going to do a public stock offering. And what you do is basically whatever this lower number is, you just multiply it by 2.2. Specifically 2.22222. So what I'm going to do is I'm going to issue 556 million shares of new stock. Picked up some money doing that, and now HeartMax owns 90%. Right, let's split HeartMax as well. And let's issue some new stock. So this time I'm going to do 889 million shares. And Itochu owns 90%. He doesn't need to be split. He's got 6,400 million shares. That would be what? Times 1.1 basically. So it's going to be 708 million, I guess. Uh, 640 plus 64, 704, so 705 million. Okay. All right. So the next thing to do is to have Itochu buy options on 100% of HeartMax. HeartMax current stock price $46.79. Okay. All I'm going to do is I'm going to round up to the nearest dollar. And regardless of what the stock price does as I'm buying these, I'm just going to buy these options at $47 a piece. Now, on these three stocks, and only these three stocks, I'm going to set it out for... Actually, you know what? Let's wait till January. Let's wait till January. We don't want to buy December. We want that extra month. All right, we need to wait till January. What can we do? We can go split some people while we're waiting. We can also update our list here. All right, let's go to PBR. And let's split him. I'm just going to go through. I'm going to start splitting everybody, and when we get to January 1st, I'll come back and we'll get started on the options. All right, we've got everybody split, but it's still not January 1st. Let's go over to the bank, who is no longer on our list. Oh, there he is. He's got too much cash. Let's put some of that into mortgages, because I don't think I'm going to be spending my cash for a while. Let's put 3 trillion in there. And when I'm ready to spend some more cash, we can always take it out if he doesn't have enough. All right, so let's just turn on the ticker and get to January 1st. And here we are. Okay, so the first thing to do is to have Itochu buy options on 100% of HeartMax. Alright, so I'm going to start buying call options on HeartMax, and I'm going to make them all for $47 regardless of whether his stock price goes up or down over these next 10 transactions. And on these 3 stocks, I'm going to make them all 2 years out. That'd be $7 billion. Now, I don't know if there's any counterparties that can afford that. Okay, well, that's 1. I don't have much hope that they'll find 9 more. But we will see. Alright, so now we got to do a smaller amount. So I'm going to fast forward while I buy however many percent I can until I have 100%, and I'll be right back. Okay, Itochu has options on 100% of HeartMax. So now we have to have HeartMax buy options on 100% of Hagemeyer. It's going to be the same deal. We're going to make them all for $63 a share. Can't find anybody at 10%. Alright, so I'm going to do the best I can to get 100%. We'll start with 5 at a time. And it's finding counterparties for that. So I'm just going to fast forward while I get the other 95%, and I'll be right back. Alright, HeartMax now has options on 100% of Hagemeyer. So now we're going to have Hagemeyer buy options on 100% of Itochu. Okay, we're going to make them all for $57 a share. And I'm just going to go ahead and start out at 5%. Alright, and I'll fast forward, get the other 95%, and I'll be right back. All right, we got options on 100% of Itochu. So now all three of our parent companies are all set. We have each one owning 100% options on the rest in a round robin fashion. So Hagemeyer now has 250 billion to work with to start buying options on our strong buy rated companies. So what we need to do is do a database search using these same parameters. We've got 40 companies. Let's take a look and see how many of them are insurance and banking. And okay, well, there's one. All right, so let's increase our minimum requirements here. Let's go to 15 billion, see what that does. 34, let's go to 20 billion. 31. And there's only one insurance company. All right, let's grab a picture of this. And let's compare this to our spreadsheet. Let me sort this too. All right, so Acer is not on the list. Let's go ahead and delete him. Matter of fact, let me just fast forward. What I'm going to do is I'm going to delete everybody off of here that isn't on this list. All right, let me delete all these and I'll be right back. All right, so here's our list. There's 26 companies on it. And let's sort it by month and value. That puts our Januaries here in the middle. So our closest one is going to be Imperial Petroleum. Which is on January the 15th. So what we're going to do is we're going to buy options on these for August. We're going to buy options on these for September. And on the ones for March, we're going to buy options that expire in October. So, first one up is going to be Imperial Petroleum. And I have his stock price as $32.28. Okay, pretty close. What we'll do is we'll buy them all for $34 a piece. And I will start buying those. $34. And gonna make them for August. Okay, and that's only 423 million, so I shouldn't have any problem getting those done in 10 transactions. I will fast forward while I do that, and I'll be right back. Alright, that is Imperial Petroleum down. And we spent 4,448 million. And I guess I should add Tochu down here. Let's see, what's the number? 79512. Alright, so next up is Toyota, which is fine because we have, actually it's not Toyota. It's going to be Pioneer, which Mitsubishi Electric may already have some of. Yeah, Mitsubishi Electric already has all of him, so he's a no-go. Kawasaki Steel is the next one. Make them all for $69. I'll fast forward while I buy the rest of these, and I'll be right back. I got 100% and we spent 5105. Down here, let's put Tochu here. Okay, so next up, all of our January ones. So next up is all the ones for February, starting with Deutsche Telekom. So we'll make it 152. We're going to set these for September. And the reason why I'm going an extra month based on when they report is so that we go through 2 earnings cycles. So we'll get their report in February, another report in May, and then they'll do one in August. And so we'll get through, I guess, 3 cycles, two full quarters at least. All right, so let's see if we can find a party for 10%. Can. Alright, so I'm going to go ahead and buy the rest of the options on this one, and I will be right back. Oh, incidentally, RakeM Bank, his earnings were up. They were positive, whereas last year he lost money. And now all the insurance companies are going to declare their earnings, and they'll all be down compared to last year. I'm not that concerned about it. We don't really care what the index or anything does right now. I'm not going to bother to look at all these. Just trust me, they're all going to be down at least 50%. But we don't really care right now. We're not worried about this year. What we're worried about is for next year. Okay, so I'm going to fast forward while I buy the rest of these options on Deutsche Telekom, and I'll be right back. We spent 18,134. And it's Amazon. Trading at $302 a share. I think there's an upper limit on price per share. We're doing options. I'm not sure what it is. I don't remember. I don't think we're going to find counterparties at 10%. Nope. So we'll have to buy these at after that. Alright, so I'll fast forward while I buy 100% of this one, and I'll be right back. And we spent 19,559. Looks like we're doing okay. We're up on everything. Wow, look at him. Tochi's way up. Alright, so next is Lenovo. The 16th, and we've gotten how many done? 5. So it's taking 3 days of calendar time to do each one of these. We've got 21 left to go. That means end of February we should be able to have all these bought by the end of February. Alright, I'll fast forward while I buy the rest of these, and I'll be right back. Morgan Stanley is next. These for 13 apiece. And probably not going to find too many at that amount. So I'll fast forward while I buy all these, and we will come back. At 16,857. Right, Forest Labs. Make all these for 85. We were able to find counterparties for whatever the last one was, Morgan Stanley, without having to reduce the percentage each time. And with this one being 30% lower, I imagine it'll be the same for this one, so I'll be right back. Alright, we are doing pretty good already. Down here, we're down on this one, we're up, we're down, we're up, we're down, we're way up. And next up is SBC. And on January 31st, well, I guess on February 1st, all the analyst ratings will be reevaluated, and we probably need to look at our search results again, just to make sure that these companies are still rated for strong buy before we continue after February 1st. Let's go ahead and get, what was it again? Oh yeah, SBC. All right, I'll be right back. Spent 10,278,000,000. As you can see, the amounts are going down in terms of the expense. So it is now January 31st. I'm going to go ahead and fast forward or turn on the ticker to February 1st. And when that is done, we're going to go look at our search results again. Max made some money, which is good. Pause that ticker. All right, let's go to our database search. And things have changed. All right, so let's see, do I want to resort this? So Avec is still on it. Xerox still on it. Universal Studios is still on it. Union Carbide still on it. Reuters still there. Bertelsmann still there. Japan Tobacco still there. Toyota is no longer on the list, so we will remove him. Hitachi still there. Caterpillar still there. US Healthcare no longer there. Qualcomm still there. Donaldson still there. Kmart still there. UP still there. McKesson no longer there. And New England Gas and Electric is still there. So we only lost three. So we're going to pick up where we left off. We'll do the rest of these, starting at the top and working down. And I think you've got the gist of it at this point. For 15 minutes or so, you've watched me do nothing but buy options. So what I'm going to do is I'm going to finish buying options on all of these. And I am going to fast forward at a insane rate and come back in 1 minute with all of these purchased. Alright, so we made it down to Japan Telecom on our list, and we've been interrupted with this business and world news update. Confluence of technological trends promises new era of plenty. Economists and investment analysts are increasingly coming to believe that the world is on the verge of a new era of plenty as a result of several technological trends which are coming together. This is one that we have seen before in our other Let's Play, and this basically means that we're going to get a easing policy. The growth rate on the GDP will increase, and basically we should be sitting pretty. Stock prices should rise across the board with all of those conditions happening at once. So it's kind of unfortunate that we haven't made it to our big hitters, our heavy hitters down here on the March campaign. But hopefully we can get those bought before there's a huge upswing. Now this is going to skew our test results on this experiment in that this is a huge boost to the entire market. So we'll have to take that into consideration when we are evaluating whether or not this strategy is successful or not. Usually we get a policy notice. Change in policy notice. Let's double check that real quick. Still neutral. That's weird. Usually you get a policy notice with that. Okay, so I'm going to go back to buying our stocks, our stock options. Japan Telecom, or excuse me, Japan Tobacco is the last one left in our February group. Then we'll start on March. It'll probably be the second week of March when I get done. But I'm going to go back to fast forwarding, and I'll be right back. Alright, I'm pausing here. We haven't bought all the options yet. We still have 5 left. But it took forever to buy 100% of Caterpillar because we started running out of counterparties that could do more than 1% at a time. And we are now into March, and I just want to do a double check and make sure that all 5 of these companies are still rated as strong buy. So Qualcomm is the first one. He's still rated for strong buy. Donaldson, still a strong buy. Kmart, still a strong buy. AEP, still a strong buy. And New England Gas. Okay, so they're all still strong buy. So Qualcomm is the one that we want. Do next, and our interest rate is still pretty high, and gold is way up there. If that starts to fall while I'm buying these, I'm going to interrupt buying options and sell off my gold along with anybody else who has it. I know PBR does. I don't remember if anybody else does. Anyway, I'll go back to buying options, and I'll interrupt again if this falls below 1800. Okay, interrupting because gold has fallen down to 1808. I'm not going to wait. I'm going to go ahead and sell off all my gold. So let's see who has it. PBR has it. And I have it, and I guess that's it. We have silver in a few places, but it's been higher, so we're going to hang on to it. So where did I leave off here? Left off with Qualcomm. So Donaldson's next. All right, so I'll be back in just a minute. All right, somebody already owns options on Kmart, so we can't do Kmart. That just leaves AEP and NGE. All right, so I'll buy these and I'll be right back. Something I want to do to help these companies out is anybody that we've bought options on, if we have their loan frozen, we want to unfreeze it so that they can increase their growth rate, which will increase their stock price. All right, so let's go over to the bank, and we are going to unfreeze anybody that's frozen. On whom we have options. So starting with Amazon here, we're going to unfreeze him, and anyone else. All right, so I'm going to unfreeze all these guys, and I'll be right back. Okay, all the options are bought. We have everybody unfrozen. We have done everything that we can to maximize our profit. Hagemeyer is still trading below his net value. So I guess before we go, let's plug these numbers in over here somewhere. Current value is, so that we can evaluate where we stand right now. I guess I'll just put them in this column here and see where we stand. I'm not sure how we're going to keep track of all of these options and when the right time to sell is, if we're just gonna let it go until they expire. Let's see what our settings are for options. We turn this from yes to no, it'll just settle them. We don't really want to take ownership of these companies because we might run into monopoly status on some of them. So I'm going to change that to not exercise. And that way the options will be settled. All right, so let me plug these numbers in real quick and I'll be right back. Okay, I've plugged the numbers in. We invested a total of $299 billion. And we're currently making a profit of $92 billion. Because our value is at $391. So far so good, and that's only after, well, I guess that's after a full 3 months. We've got 3 months left to go. So, not sure how long we've been running because I haven't put this together yet in the post-production, but I imagine we're getting close to an hour. And I really want to take a look at each one of these stocks now and see what they're rated at, make sure that their earnings are going up, look at the industries and all of that stuff. So I am going to end the episode here so that I can do all that without taking up your time. But so far, this looks like it's working out. I'm not sure how much it's due to the scenario that's currently running and how much is just being able to rely on the analyst's rating. But I guess we'll find out here in a little bit, in the next episode or two. And need to figure out just at what point are we going to exit this strategy. At what point do we cover and sell off all of these options? Do we wait until they expire and let the game cover them? Or do we spend half an episode selling these off? That's the question right now. All right, but thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.